If you're considering setting up your own hedge fund, then you came to the right place. Today I'm going to share with you my version of a beginner's guide to starting your own hedge fund. Hey, it's Frank Nagy and welcome to my channel where we help financial entrepreneurs grow their business in the financial markets. If you like this video, subscribe to my channel and hit that like button. Why start a hedge fund? Well, hedge fund management has the potential to be very rewarding, not to mention lucrative. A management fee of 2% for all assets under management and a performance fee of 20% of annual profits are included in a typical fee structure known as the 2 and 20. You also need to have a high net worth clientele, people who want to have desire to invest in your fund that's at least worth $100 million. As a beginner, you'll need to know 5 basic steps to start a hedge fund. Number 1, have a cutting-edge strategy. Hedge funds are first broken down into distinct investment strategies, which is further refined into the separate investment styles. Every fund must have a specific investment style and strategy, and no two funds are alike. So what strategies do most hedge funds utilize? Well, there are about 7, and they include emerging market, equidirectional, equity market neutral, event-driven, fixed income, and managed futures, and multi-asset. Whatever your strategy or style is, it's important to note that you will need to properly describe this in your offering documents. Your hedge fund consultant and your attorney will help with any wording that you'll need to make up to prevent any misleading statements. Hiring an experienced hedge fund consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your hedge fund. A good consultant will make the appropriate introductions with the proper service providers that will best suit your hedge fund needs. Number 2, decide on the jurisdiction. It's important to understand your options when choosing a jurisdiction where your hedge fund will be domiciled. For example, if you choose to set your fund up in the United States, you are limited to only U.S. investors. And the state of Delaware has been the home for almost all investors domiciled in the U.S. Now, if you decide an offshore fund, then you might consider the British Virgin Islands. Typically, an offshore fund caters to foreign investors located outside of the United States. And certain U.S. exempted investors are also allowed to invest in these funds like IRAs and foundations. Number 3, deciding on third-party service providers. There are several administrators, auditors, accountants, attorneys, banks, and prime brokers that want to work with your new hedge fund. And these costs need to be factored in your expense when you're considering bringing on these providers. Fund administrators can be costly if they have a recognizable name. So look for investors that will work with your startup fund by keeping the monthly fees low. Most administrators will raise their fees as your assets grow. Auditors, on the other hand, are required, and it is an industry standard. Besides, your investors will demand it. A good auditor will specialize in fund management and run about $3,000 a year. However, if you want a name brand one from the Big Four, you're probably going to pay about $10,000 to $25,000 and up. A good attorney will not only review your documents, but will advise on changes in laws that can help and affect your fund. And your attorney will also help you with blue sky filings. These are filings that each state requires when an investor from that state subscribes to your fund. If you work with a hedge fund advisor like Frank Nagy Financial Services, who will prepare your offering documents and advise you in these areas, you'll be sure to have a qualified securities attorney review all your documents before you're approaching your investors. Banks and prime brokers are in the business of developing relationships. They offer margin, clearing, and settlement investment research as well as capital introduction. Most traders and managers have already established a relationship with them in the brokerage firm, and I suggest reaching out to them to see how they can enhance their services by bringing on your new hedge fund. Number 4, seed capital. It's important that your new hedge fund be well capitalized, and here's a short list of avenues to approach. Family and friends, high net worth individuals, financial advisors, family offices, fund of funds, corporations, foundations, pension funds, and investor networking events. When approaching these sources, you will need to have a properly drafted pitch deck, offering documents, and any background profile on you and your management team. Also, be cautious of individuals who want to earn a funding fee for investors they introduce. It is illegal to pay a finder's fee for capital deductions in the United States unless that individual is licensed as a security broker with a licensed brokerage firm. Number 5, decide on a launch date. In my years of setting up hedge funds for clients, I've seen funds launch after a certain amount of seed capital raised, and I've also seen funds launch soon as the first subscriptions are approved. This all depends on your minimum investment amount and your trading strategy. It's best to consult with your hedge fund advisor on this one. If you're thinking about starting a hedge fund, I recommend my book, The Ultimate Hedge Fund Guide. Click on the link below in the description box. And if you haven't yet subscribed to my channel, click on that subscribe button and so you can get updates on all my videos that I post.